Ladies and gentlemen, good day, and welcome to the Nisus Finance Services Company Limited H1 FY'25 conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Saki Panjiara from Kirin Advisors. Thank you, and over to you, ma'am.
Thank you. On the behalf of Kirin Advisors, I welcome you all to the conference call of Nisus Finance Services Co. Limited. From management team, we have Mr. Amit Goenka, Chairman and Managing Director, Mrs. Mridula Goenka, Executive Director, and Mr. Sunil Maheshwari, Chief Financial Officer. Now, I hand over the call to Mr. Amit Goenka. Over to you, sir.
Thank you very much, Saki. A very warm good afternoon and namaskar to everyone who has taken the time to join us on this call today. We are very thankful for your time. I express my heartfelt gratitude and thanks post our listing on 11th of December to all our shareholders who reposed their unwavering support and trust in us during our IPO journey. It is because of this that we were able to see a nearly 192 times subscription. We are very, very grateful for that trust, and we are deeply committed to upholding the faith placed in us, upholding the highest standards of transparency, corporate governance, and investor communications. With your valuable insights and feedback, we believe we can do better. We have a singular mission of Viksit Bharat with our multiple AI funds in India, aimed at urban infrastructure. With this, I'd like to introduce Nisus Finance in a very brief way to those who have not completely understood the business model. Nisus Finance, set up over 11 years ago, has been at the forefront of urban infrastructure financing, that is financing the completion of various projects across India, including residential, commercial, hospitality, retail, etc.
Amit, sorry to interrupt. Sir, there is an airy sound which is coming when you're speaking.
Is this better?
This is much better, sir. Yes, please go.
Okay, sure. Just to lay the context, Nisus Finance has been at the forefront of urban infrastructure financing, that is helping finish projects which are in various parts of the country in key locations of Tier 1 and Tier 2 locations of India for the purpose of completing residential, commercial, hospitality, retail, and other key urban infrastructure assets. We are also involved in private capital market transactions, which means we are helping our investee companies or other players in the space to obtain capital through syndication, debt restructuring, equity syndication, and other private capital sources. We are operating, therefore, in one of the most fundamental sectors of India, which is urban infrastructure and urban development. We are led by multiple funds, two of them being operating as Rezo 1 and Recof 1. Both have combined EUM value of roughly about 2,200 crores, which need to be deployed over a period of time. We are led by, of course, the growth in AIFs. AIFs have been growing rapidly, with over 20% being deployed in real estate. We've seen over 25% year-on-year growth within AIFs, with AIFs having garnered almost about 13.5 lakh crore rupees last year, and looking to effectively reach the mutual fund size of 40 lakh crore rupees in the near future. We're also buoyed by the demand for capital, which as per World Bank estimates say that India is underfunded by almost $300 billion for the purpose of development of asset classes which are under construction in the India real estate space. So that's the target size that we wish to address through the various funds that we're operating. Our funds continue to get managed and deployed across Tier 1, Tier 2, and Tier 3 cities, therefore getting to the Bharat story, not just the 4 or 5 metro locations of India, and we're buoyed by the strong regulatory landscape available in our favor. We're also buoyed by the great amount of global interest we are seeing through various global investors and funds who are investing with us and looking to further participate with us across our investment strategies. We have further diversified this year into Dubai real estate and GCC, covering not just GCC and UAE, but also potentially the EMEA region. We've seen that that GCC region and especially UAE real estate has seen a significant growth of nearly 2 times in the last 2 years, with the real estate sales being about $72 billion in UAE alone, which is almost equal to the amount of sales that we see pan-India. There's been a significant amount of government reform, which is bringing in global capital, necessitating emerging market managers like ourselves to be at the forefront of this opportunity set. We're very uniquely positioned to capitalize on this growing opportunity within India and within the GCC region. Our deep industry experience, expertise, cutting-edge innovation, our unique products, highly experienced team are very, very good to seize the opportunities that lay ahead of us. With this IPO, we're well poised and garnered to grow at a hectic pace, well demonstrated by our financial results. We continue to work towards our vision of becoming the most admired alternate asset manager from India for the world. With this, it is important that we maintain transparency and open communication and build trust and collaboration with all our stakeholders. I would like to encourage all possible questions that can be had at the end of this presentation. And pleased to hand over the next delivery of results to our CFO, Mr. Sunil Maheshwari, who will quickly take you through the key financial highlights of H1 FY'25.
Yeah, hi, this is Sunil. So, about the key highlights about H1, I am starting with the revenue analysis, which is from H1 financial year 25 to H1 versus H1 24. So, our revenue has increased 2.8 times from 12.09 crores to 34.63 crores, which is resulting in increase over 186% YOY growth. And the company has identified 2 segments. The segment 1 has generated 27.1 crores of revenue versus 9.44 crores of revenue in last financial year. Last H1. And in segment 2, we have generated 7.5 crores of revenue against 2.64 in H1 financial year 24. Now I'm coming to the profitability analysis, which is also comparing from H1 25 versus H1 24. So H1 25, the EBITDA and PAT stands at 21.4 crores and 18.84 crores, resulting in 184% and 269% YOY growth respectively. The PAT margins had increased from 42.2% in H1 24 to 57.2% in H1 25. The growth in profit has boosted the EPS from 2.82 per share to 10.35 per share. Now I'm moving to balance sheet analysis, which is in H1 25 versus audited financial year 24. The balance sheet has grown from 49.19 crores from financial year 24 to 67.26 crores in H1 25. The company has reduced the long-term liabilities from 6.17 crores to 4.5 crores. The trade receivables has increased from 10.52 crores in financial year 24 to 30.82 crores in H1 financial year 25. This increase on account of large advisory services is done in quarter 2. So these are related to the special situation advisory business, and the payment will happen as per the payment terms. Now moving to cash flow analysis, this is H1 25 versus H1 24. The company has a cash reserve of 5.46 at H1 25 versus 4.86 in H1 24. With a net decrease in cash and cash equivalent of about 2 crores versus increase in 1.19 crore in H1 24. This is also because of the increase in the receivables in quarter 2 in financial year 25. And these all comparison was based on the consolidated figures. Now I'm giving the key, Mridula ma'am will tell us about the key highlights of the Nisus Finance.
A warm welcome to one and all. Welcome to the earnings conference call of Nisus Finance. I would be covering the key milestones achieved by Nisus Finance. So in the India fund segment, we completed transactions worth 290 crore rupees with an additional 700 crore rupees under term sheet stage. Internationally, we have made remarkable strides through our Nisus High Yield Growth Fund with a USD of 250 million corpus focused on real estate opportunities in the GCC and EMEA region. Our operations in Dubai are gaining significant momentum, supported by the maiden investments of 455 crore rupees in advanced stages of conclusion, and a robust pipeline of high growth projects. As we look ahead, we remain steadfast in our vision of sustainable growth, driven by strategic investments, operational efficiency, and a deep understanding of the markets we serve. We are expanding our footprint in high potential regions and strengthening our portfolio to deliver value to our stakeholders. We have signed LOI worth rupees 200 crores, showcasing strategic execution in high value projects. We are managing assets worth approximately 1,000 crores as of financial year 24 through subsidiaries and associates like Nisus BCD Advisors LLP and Dalmia Nisus Finance Investment Managers LLP. Once again, I extend my heartfelt thanks to each one of you for your support, trust and partnership. Together, we are poised to unlock immense potential and make the next chapter of Nisus Finance Services Co. Limited even more rewarding. Thank you, and I look forward to an engaging discussion ahead.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles.
Could I request you to be a little more loud?
Sure.
Finding a little issues with actually the volume of your, the decibel of your voice. So,
participants, you may press star and 1 to ask a question. We'll move to the first question. The first question comes from Vaibhav Jain from Nucleus Capital. Please go ahead.
Good afternoon, ma'am and sir. My first question is, as per the RHP, the company is planning to raise funds from India, Dubai and GIFT City to support its subsidiary named Nisus FinCorp Private Limited, which is a RBI registered NBFC. What is the target size of the loan book of the company for next 1 and 2 years? And additionally, which kind of profitability and margin does the company expect from the NBFC operation?
Vaibhavji, thank you very much for your question. This is Amit Goenka. Sunil Maheshwari, CFO, will also answer. But what you mentioned is that the company is raising funds from multiple sources for our AIF business, not for the NBFC. As you rightly said, the NBFC is called Nisus FinCorp Limited. The NBFC acts as a very special vehicle for the purpose of investing as a sponsor into our various funds. It also acts as a lender with our and as a co-investor with our various investee companies, or as a co-lender with our various investee companies.
Okay. So, sir, what is our current AUM and what is the target for next 1 and 2 years? Additionally, could you provide detail on the fund management fee structure for AUM, including the percentage of AUM typically charged as a management fee?
Right. Now, different funds have different fee structures. We currently run about 3 funds. As far as the AUM is concerned, as we mentioned, we have We had about 1,000+ crore rupees of AUM as of FY 2024. We have concluded additional transactions, as you were told, of 290 odd crore rupees in this first half, plus another 455 crore rupees worth of transactions under closure in Dubai. Plus there is a certain amount of term sheets which are under closure, as well as an LOI of 200 crores which was signed in Dubai. So the actual AUM will be actually known more clearly by the end of the financial year, since we have a very strong WIP. As far as the fee structure is concerned, it could range from between 1.5% to 2%, depending on each investor and each opportunity.
Okay. And sir, in our transition advisory business, which kind of growth we can expect? Because in this we are providing advisory, so our margin, I mean, it is just a consultancy kind of fee. So which kind of growth we can expect in this segment, sir?
We've always maintained that there's been a very strong correlation between our investment and advisory business, because we tend to work with the potential borrowers or investee companies that come to us. We've had over 400 opportunities that we evaluated last year, almost about 180 opportunities that we've evaluated more or less in this period year to date, and we're not able to obviously invest in all, so several of them become potential candidates for advisory. We do maintain that we have roughly about 1/3 of our revenues coming from asset management and related businesses, and 2/3 of our revenue coming from advisory. So we think that will get maintained. So because of that correlation, as the AUM grows, we will continue to show robust growth across both the segments.
Okay, thank you, sir.
Thank you. The next question comes from Sampath Nayak, an individual investor. Please go ahead.
Hello, Mr. Congratulations on good set of numbers. This is Sampath Nayak. So, my question is regarding GCC investment. So, are we targeting Ras Al Khaimah by any chance? Real estate opportunity in Ras Al Khaimah?
No, currently we're not. Our focus is not on so much on greenfield developments. Our focus is more on ready completed assets or nearly completed assets, which is not present in Ras Al Khaimah. So currently our focus continues to be in the Emirate of Dubai, potentially expanding to Sharjah and Abu Dhabi.
Okay, because I've been hearing that there could be opening up of a new casino in Ras Al Khaimah.
That is correct. It will open in 2027. That's the anticipated date, but it has no bearing on our business, because that's a developer's business of development of high-end real estate for potentially people who would like to come and stay or invest there, but it's not a developed city yet.
Right. Okay, sir. Thank you and all the best.
Thank you. The next question comes from Shruti Malpani from Arth AIF. Please go ahead.
Hi, good afternoon. So I would like to ask am I audible?
Yes, very clearly, Shruti.
Yeah. So could you provide an update on the utilization of the funds raised through IPO? Like you had some planned licenses for Dubai Gift City. So are they in action?
Very much. Sunil, maybe you can provide some clarification.
Sorry?
Yes, of course. Shruti, all the plans are exactly as per the RHP. We raised money for the purpose of accelerating our EIS business, including raising money and getting licenses. We've already started that process. So we're certainly on mark as far as our plans are concerned.
And how are they expected to contribute to the company's growth in the coming years?
As I mentioned, it may not necessarily have an immediate impact in this financial year because it's a long-term growth capital. It's not something which is going to provide an immediate plug, right? What it is expected to do, obviously, is help us accelerate our AUM multiple times, since we're raising large amount of global funds. Plus, it will help us get licenses which are necessary for these global funds to participate with our existing funds. So, which is why all of this will pan out over a period of next few quarters. So, we'll start seeing that impact over a period of time.
Okay. So earlier, like in the DISP fund, out of the $250 million, only $50 million were deployed.
Mm-hmm.
So, what's the plan on investing the $200 million?
Like we've disclosed, we've signed an LOI for another 200 crores or roughly another $25 million. We've got an active pipeline of another 1,000 crores, which is being actively pursued. So yes, it is all being accelerated.
Okay. And what are the projections for the coming years?
Unfortunately, SEBI regulations do not allow us to provide any forward-looking statements. But yes, you've seen the growth, and we wish to maintain the same trajectory that you've seen the last few quarters or last few years.
Okay.
We're committed to that, the growth numbers that we've been showing you.
Okay. And the plans for the, wholly owned NBFC, what about that?
Yes. So as I mentioned in the previous response, the NBFC will be an essential part of our investment strategy since it co-lends along with us, and it is important to have a NBFC co-lend along with an AIF in our India projects. It will also act as a sponsor and as a sponsor to the various funds that we are raising. So it's important to have some sponsor capital as well as co-lend with our projects which have a very high ROI. So that's the strategy for the NBFC.
Okay. I just have one last question. So in your cash flows, you've shown sale of NCDs. Can you explain a little bit about that?
Yes, of course, it's a part of our business. As you know, every investment manager is required to invest into debentures or units of the fund as a co-investor or a sponsor capital. So that's part of our sponsor capital. When we start exiting these funds or investments, we start seeing a significant amount of money come back, and that's part of that sale. It's a natural course of our business, as a co-investor or as a sponsor to each of the funds and each of the transactions. It's a sponsored investment as part of the fund operation.
Yeah. Okay. Thank you.
Thank you, Shruti.
Thank you. The next question comes from Prateek Chaudhary from Samarthya Capital. Please go ahead.
Hello.
Hi.
Hi. Sir, could you please give details on why the receivable days have increased so much? Because receivables we see almost to the tune of 32 crores and yeah, please, if you could.
Sunil, if you can take that.
So as I already mentioned, this receivables has been increased because of our special situation fund. So because these are transactions are related to very large number of amounts, that's why we have agreed upon some payment conditions.
So Prateek, to answer you, we had about 10.5 crore rupees of receivables as of FY'24 end. And
Yes.
we have about 30 odd crore rupees of receivables as of H1. We collected about 15 crore rupees already. So we collected the 10 crore rupees that was due as of March plus another 5 crore rupees of this year, leaving us effectively about 30 crore rupees of receivables because a significant portion of this business got concluded within the end of Q2, which will obviously get collected which a significant portion is getting collected and got collected and will get collected and will get reflected as of FY'25. So it's a very standard process and a standard cycle where you will see lumpy receivables because especially from transaction advisory, because when a very large deal closes, not so much so from the fund management business, but when a deal closes and a large invoice is raised on closure, there's usually a payment structure as to how much money will be received in 30 days, 60 days, 90 days, and 120 days. So we're getting paid as per that.
So we're already end of December, and whatever transactions you must have closed even in September, a bulk of those payments you might have already received. So
yes.
So is that true? Have you already received?
Absolutely. So we have no concern in terms of receivables. All receivables are standard. All receivables are current. All receivables are being paid as per their payment schedule, and therefore we have zero write-offs or zero concerns with receivables.
And end of FY'25, where do you see the receivable days to tend to?
Well, Well, it's hard to say, but, is that, as the revenue is growing at the speed at which it is growing, it's likely that some of the receivable numbers will be similar to what we see. So we might end up collecting all of that, which we've seen as of H1. We will end up collecting all that you're seeing as of H1, but because we will end up also doing a significant large amount of business in H2, you might also see a very large amount of receivables. Like I mentioned, that what we finished in H1 in FY'24 we collected. What we finish in H1 we'll collect. What we'll finish in H2 might stay outstanding to some extent.
Okay. And this is in the normal course of business?
It is absolutely the normal course, because obviously see what happens is when you transact and when you're helping somebody sell an asset, the payment for that asset happens over a period of time. It doesn't happen entirely upfront. And so because of that, the payments are linked to some of those payments, not entirely to that schedule, but some of it. So which is why it tends to go between 30 days to potentially 120 days.
And this should not be a working capital challenge for you, right?
No, it's not, because our working capital, as you see, our costs are very low. So working capital does not get disrupted. Everything is flowing to PAT anyway. It's not getting used in working capital or cost.
Right. And, alluding to your one of the interviews where you spoke about 1 billion AUM target, is that a 4-year vision that you have?
Well, yes, we mentioned that that's our vision 2027 is to at least be $1 billion AUM, but more than that, to be the most admired alternative asset manager in India. But yes, I think the idea is to accelerate the opportunities, because both India and the UAE combined do have a multiple of that, as I mentioned to you, that the UAE is potentially a $70 billion opportunity, and India is potentially a $300 billion opportunity. So yes, we certainly want to try and reach that mark.
By FY'27?
Yes, hopefully in the next couple of years.
Okay. And this, what would be the, in terms of whatever planning you're doing, in terms of raising of this capital, what would be the broader bifurcation between India and the other geographies?
So, India numbers are very healthy. So if you see the India funds, which is 1,700 crore rupees plus the of the special situations fund, and the 500 crore rupees is very largely based out of Indian families. As far as the UAE funds are concerned, which is a global fund, it's an equal mix right now between Indian investors and international investors. And I say international investors, they also mean Indian diaspora and NRIs who are participating in the DIC fund. But it's likely that the foreign investment, the whole purpose of this IPO was to be able to set up these structures so as to allow larger institutional global capital to flow in and to pay for some of the larger global distributors who are picking up our products. So we're likely to see a larger skew now with the larger global participation now joining us than the current, the current ratio of Indian investors being larger.
Right. And I just want to understand the numbers correctly. Like you said that the current AUM is 1,000 crores. And then you also say that there was this Indian fund which with around 1,700 crores and 500 crores. So where do the numbers mismatch?
No, there's no mismatch. We just said when we say AUM, it's about how much money has been deployed and is being managed, right?
Okay.
When we say a fund size of 1,700, it means how much a fund will likely invest. So that's the peak or the high water mark.
Right.
So we're just giving you a high water mark, saying that one fund has a high water mark of 1,700 crores, the second fund has a 5,500 crore. So cumulatively 2,200 crores, the high water mark. We have currently as of FY'24, and out of that managed only 1,000 odd crores.
And the rest has to be raised and then deployed, or?
Yes. Bulk of it, yeah. Some of it has to be raised, some of it is already raised and has to be deployed.
Okay. And you see this 1,000 crore current AUM number, say to an aspirational 1 billion target in a number of years.
Absolutely. That's the vision.
And the advisory business would transaction advisory would move in similar proportion as you had said earlier.
It has to, yes.
Okay.
That's the reason when we do special situations, we don't do standard credit and we don't do, simple stuff.
Okay. Understood. Great, sir. All the best. Thanks a lot.
Appreciate it. Take care.
Yeah.
Thank you. The next question comes from Gaurav Atalkar from Shriji Ventures. Please go ahead.
Congratulations on the great numbers.
Thank you.
Most of the queries or numbers or information which I was seeking is answered. Just a couple of things I wanted to understand. What is our average cost of rate of lending when we for an NBFC business?
Well, NBFC tends to be in the mid-teens. Funds tend to be much higher. So each strategy and each, there is no sort of single benchmark rate because these are all special situation opportunities, right? So it's not retail lending for a specific strategy.
Okay. And any particular sector we are more focusing or?
As we mentioned up front, Gaurav, we're urban infrastructure focused. So all of our business will be focused on hard assets, housing, commercial, data centers, warehousing, retail, all of those hard assets, hospitality, healthcare.
Okay.
So we're squarely focused on hard assets and urban infrastructure. We don't do anything else.
Understood. All the best. Thank you.
Thank you, Gaurav.
Thank you. The next question comes from CA Vikash Vijayvargiya from Accountry. Please go ahead.
Yeah, thank you. Just Amit bhai, what is covered in the urban infrastructure? I missed out something in there actually.
I'm sorry?
What is covered under because your company in the urban infrastructure and financial solutions company is there.
Yes.
What is coverage in the urban infrastructure?
I just mentioned to the last query that urban infrastructure includes anything which is creating a social, livable environment, which includes housing, commercial, retail, hospitality, healthcare, data centers, warehousing, etc.
Okay. And
it's not core infrastructure. We don't do core infrastructure. We do urban infrastructure.
Okay. Understand. It's include a hotel, hospitals, everything.
That's right. So we don't do roads, tolls, ports, all of that. So that's core infrastructure. We do urban infrastructure.
Okay. Understand. And apart from that, one thing, because right now you are present in the metros in the Mumbai and the Pune kind of city. Whether you have some kind of the planning for the tier 2 cities like...
We already mentioned some time back, if you heard, because that we're already present in tier 2 and tier 3 cities and we're expanding our footprint. So we're already in Surat, we're in Indore, we're in multiple cities across the country and we're expanding our footprint. We're not just present. And that's one of our biggest strengths compared to some of our players. We're only there in 5 cities. We're already looking at being in 20 cities potentially within the next 12 months.
Next 12 months, there are 20 odd cities.
That's right. So that's the reason we talk about Viksit Bharat, because we're looking at Bharat, not just Indian metros.
Okay, understood. Thank you.
Thank you.
Thank you. The next question comes from Sivraj Sajela, individual investor. Please go ahead.
Yes, I am audible.
Hello?
Hello? Yes, I am audible.
Yes, now you're audible, please.
Yes. So my question is, I have observed one thing in last year financial. So since our business is H2 heavy, so like what kind of mix we can expect in this year? Is it like 50-50 or something else?
Sorry, I didn't follow that. So, Sunil, did you follow the question? Or Midula?
No, could you please repeat the question? The voice was quite low.
Sorry, so am I audible now?
Yeah, you're audible now, sir.
Yes, so what I'm saying is...
Hello?
Hello?
So please go ahead with your question.
Yes. So I'm saying in the last year financial, it seems our business is second half, it is like H2 heavy. So what is the general mix we can expect in this year also?
So you're right. H2 has tended to be high. It's seasonality. There is seasonality in our business because real estate itself has seasonality. Now, if you look at real estate sales, almost about 60-65% of the revenues in real estate happen in the second half. Usually post-monsoon, post-Diwali, etc. So we tend to see similar. In fact, not just us, most other lenders, most other investors also tend to see similar patterns. If you see our historic numbers also, you will see that a significant revenue has actually come in the second half. So we expect the same trend to continue this year as well and going forward.
Good, sir. And in the one of the notifications, Vivek Oberoi has joined us as a partner, right? So, like, what is his role basically and how it will benefit?
He's coming in as a partner in the Dubai fund, since as you know, he's based in Dubai and has a significant amount of business presence there. Since we're still new to the Dubai market, we understand real estate, we understand investments, we understand structure, but in terms of compliances, regulations, distribution, governance, bringing a lot of other supporting ecosystem for our funds. That's what he brings in as the table along with his capital. He's also invested. So he joins in as a partner with all of these things, yeah.
Okay. Got it, sir. Thank you.
Congratulations
for the...
Thank you.
Thank you. The next question comes from Ankur Gulati from ABC. Please go ahead.
Hi, thanks. Can you give us more color on the advisory side of the business? What kind of advisory and how do you go about origination that side of business?
Sure, Ankur. The advisory business largely consists of resolving assets or capital for our investee companies or for other clients which are in the built environment. So if you see, we've really helped, for example, a company rescue its assets from an NCLT proceedings and restructure it and get it sold. We've helped people recapitalize their balance sheet with syndicated debt. We've also helped companies dispose of their assets by selling off land or developed assets, including hotels and other assets which are non-core to their business and recapitalizing their balance sheet. We've helped companies also do strata sales of specific assets, including related to developed residential complexes or pre-leased retail assets, etc. So it's a very wide spectrum of things where we're able to work across the real estate and urban infrastructure value chain and help monetize assets or capitalize balance sheets. So that's what we've done. Because people will typically come to us for capital, we realize that either our capital is not sufficient or not adequate or not the right capital for those borrowers, or that they have surplus assets which can be sold and monetized and money brought back to the balance sheet, therefore reducing the need for external borrowing.
And is there a bit of a syndication business there as well? I mean, let's say originated.
Yes, of course. Yes, of course. Like we recently mentioned that we've tied up with a Grade A developer for one of the companies, and we've also partnered with a very large financial institution for some of these transactions. So yes, the advisory team continues to find partners in multiple institutions, which we can then syndicate together into a larger trade.
Understood. See, I'm just trying to figure out, let's say your AUM grows at hypothetically 20%. So is advisory business linearly related or is it independent of it?
No, it is linear. It is very deeply correlated.
Right. So wherever you invest, you basically help the portfolio, right?
It's not just invest. I mean, it's not necessarily that we have to invest and therefore the advisory happens. It's also because the larger the AUM, the larger the number of deal flows, and therefore the larger the number of deals that get locked in, either with the advisory team or with the investment team or both. So it's really a function of how much capital is available and therefore how many deals we see, which are meaningful.
Okay. In first half, was there any carried interest in the revenues or not?
There was not much. I mean, except for the debentures which got sold and exited, which was the end of one of the older investments and exits. So to that extent, it gave a certain amount of carry. But no, we haven't really booked any carry yet. We'll start seeing significant carry numbers coming out as these funds start winding up. Currently, there are 2 funds under operations. So no, there is no carried interest portion as of today, which is part of the financial.
And when do you expect, sorry, again, on carried interest, is it sometime end of next financial year?
Yeah, so I mean, the Nisus fund should exit potentially within the next 12 to 18 months. So we'll see some carry at that point in time. The current fund will exit in maybe about 27. So we'll see some carry at that point in time.
And you mind sharing some headline, I mean, based on whatever current yields are on the portfolio, what percentage in basis point of your AUM those carried interest looks like?
Can't give you any numbers, to be honest, Ankur, in terms of what the carried interest will be. But yes, I mean, it's the formula has been to earn about 15% carry over a hurdle rate of 12%. And since the AUM is large and the IRR is also fairly large, I think we see a very healthy carry.
Perfect. On Dubai side, sorry, are you guys going into yield assets or these are still residential?
No, we're into yield assets, yes.
And you make money in local currency, so the currency
there is no currency play at all in Dubai. It's a dollar-denominated fund, so there's no currency play. Yes, for Indian investors, there'll be some positive currency upside, but that's not the function of the fund. It's not working for currency. The different investors from different parts of the world will see different currency outcomes.
That's it. And last, any plans to go beyond real estate and broader infrastructure plate or broader business situations?
Haven't really. I mean, that's something that the board will deliberate at the end of the financial year, whether there's enough opportunities and whether the current trajectory will maintain the current business pipeline and funds will maintain the trajectory, or we need to do something separate. But as of now, there's no thought.
Sorry, last one. I think you mentioned, but no plans to use NBFC for direct lending, right? The investment.
Not really. It's not something that is of great value and interest to us. Is to build out a very large NBFC book for direct lending. It will be just acting as a co-lender and as a sponsor.
Very good. Okay. All the best. Thank you.
Thank you.
Thank you. The next question comes from Pranav Shrimal from Pink Wealth Advisory. Please go ahead.
Yes. Hi, good evening, sir. I would like to congratulate you for the results and the listing and the whole team. I just had one question, sir. In terms of revenue recognition, how do we recognize the revenue?
Sunil, you want to take that question?
Yeah, so this is revenue recognition based on the services being rendered. So whenever we render the services, we are supposed to issue the invoices.
And completion acceptance of service as per contract.
As for the contract, in terms of the AIS, that happens yearly. The dues that we take from the client, that is yearly, monthly, or at the time that we
go for that. Fees are charged quarterly on the deployed AUM.
Could you repeat? Your voice was not clear.
I'm saying on the AIF, fees are charged to the investors quarterly on deployed AUM.
Okay, fees are charged quarterly, and it becomes due immediately, correct? There is no
yes. It's charged and due and paid quarterly. Yes.
And that is all received in INR, or it depends on where it is in Dubai?
No, right now it's in INR because bulk of the funds are in India. Of course, now we started to receive funds in Dubai, which are in dollar terms.
Got it. That's it.
But it will all finally convert to rupees and get consolidated on our India balance sheet.
And just one point on the taxation. So when the AIF is mature in Dubai, whenever you start and it gets matured in Dubai, after the maturation, when we close the AIF, do we pay taxes in Dubai or do we pay taxes again in India?
No, because there's a 10-year tax holiday to GIFT City, all the investments and the managers to GIFT City. GIFT City acts as a sponsor. There's a 10-year tax holiday. So whatever income is earned in GIFT City from the Dubai funds, and therefore 100% of that income gets added to the profit of the India company without any further incidence of tax. Sunil, just correct me if I'm wrong. Sunil?
Sorry, I didn't hear, sir.
No, so you're saying, is there an incidence of tax on the income earned from the Dubai funds in India?
No, because we have an IM entity in Dubai itself. So any any income generated from the fund in Dubai will be the income of Dubai entity itself.
So income of Dubai entity, which becomes the income of the GIFT City entity, which has got a 10-year tax holiday.
That will be, the profit share which will Dubai entity will receive.
That's what I'm saying. Absolutely.
So the tax incidence in Mumbai, the India entity will not be will not occur because of the Dubai transaction.
That's right. That's what we understand.
But then, since it's a tax holiday, we also need to reinvest that fund into the business only, correct? That cannot be used as dividends or given back to the investors.
I'm sorry?
The profit that whatever we make from the Dubai entity and in the GIFT City as well, that has to be reinvested into the business only, or can it be?
No, it can be distributed. Of course, it can be distributed.
It can be distributed. Okay.
Of course. Why does it have to be?
Got it. That's it from my side. Thank you so much.
Thank you.
Thank you. The next question comes from Deepak Mehta from Mehta Equities. Please go ahead.
Hello.
Hello.
Yeah, thanks for the opportunity, sir. An excellent set of numbers. Sir, I joined the call late, so I'm not sure if this is a repetitive question. My question is around the Dubai business, sir. So primarily we are going to invest in new property or distressed property in the Dubai business, sir?
We're investing into distressed, completed, rent-yielding assets.
Okay.
Right. So this is basically a yielding asset. We're only buying out ready, completed, rent-earning assets in the UAE.
Okay.
At a deep discount.
Okay. And primarily, who will be the funding entities? It will be PE firms or some Indian family businesses such as Dalmia.
So I was just mentioning that we've got money from Indian investors as well as from global investors. And both have contributed to the fund. We have also got leverage from local banks, and which is why we're able to start these investments. So it's a combination of bank loans plus global investors and domestic investors.
Okay. And my last question is around, sir. So you have invested, the one AIF with Dalmia. So I believe it's in maturity stage and you are selling that assets. So, and 10% would be the total fees for Nisus, right, sir?
Sorry, I'm not aware. What is this 10% about?
So typically we have 10%, profit sharing for AIF business, right? So we can assume. So suppose.
Yes. I see what you're saying. Yes, it is part of the carry structure. Yes.
So suppose if AIF has gained 2x or 3x of profit or gain, so 10% is flat our share, right?
I mean, it's a slightly different formula, but let's assume it's 10%. So then what happens?
Okay, sir. That's it. Yeah. Thank you for your time, sir.
Thank you. The next follow-up question comes from Shruti Malpani from Arth AIF. Please go ahead.
Hello.
Hi, Shruti. Welcome back.
Hi, sir. So your company's PE is currently high compared to the industry's ratio. So, what might be the reason behind that?
Sorry, can you repeat that?
Am I audible?
Yes, you're audible. Please repeat it one more time.
Yeah. So, your company's PE is currently high compared to the industry. So, is there any specific reason behind that?
PE? So, you know what our earnings of H1 are, right?
Yeah.
Okay. And so how you take our PE? How do you assume the PE to be higher in industry?
So I got the figure from Screener.
Yeah. So I mean, see, I'm not certain how. Yeah. So I'm not certain. I don't necessarily subscribe to some of the portals' calculation methods. Let's look at our own numbers because we've demonstrated what our earnings are. You know what our market cap is. So you can do your own math and see what the actual PE is because different companies will look at, the different portals will look at some historic numbers and not current numbers. So if you look at from historic numbers perspective, of course it'll look high, but if you look at from current numbers, which is really what the market is valuing, then it will maybe not look as much. We're not even doing on forward-looking numbers. We're just simply looking at H1 numbers. Okay? Any other questions? Yes.
Participants, you may press star and 1 to ask a question. We have the next follow-up question coming from the line of Pratik Chaudhary.
Hello?
So just give me one moment.
No problem.
Yes, Mr. Pratik Chaudhary from Samarthya Capital, please go ahead with your question.
Am I audible, sir?
Yes.
Sir, on the Dubai side, you mentioned that the funding would be from bank loans as well. Did I hear that correctly?
Yes, I mean, we're onboarding banks as well to fund the acquisitions, yes.
To fund acquisitions?
Yes, we're buying assets.
Okay.
These are pre-lease completed rent-earning assets, so it's a standard strategy to buy these on leverage like REITs do. REITs will always have a leverage to buy these assets, so it's very similar to that. But it's not a REIT.
Okay, understood. Thank you, sir.
Great.
Thank you. Ladies and gentlemen, we will take that as a last question for today. I will now hand the conference over to Ms. Sakhi Panjiara from Kirin Advisors for closing comments.
Thank you everyone for joining the conference call of Nisus Finance Services Co. Limited. If you have any queries, you can write to us at research@kirinadvisors.com. Once again, thank you everyone for joining the conference.
Thank you. On behalf of Nisus Finance Services Company Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.